So this is probably one of the most common questions that I've been getting lately, is people are looking for me to talk about penny stocks. So this is basically going to be a video for complete beginners who want to learn about penny stocks. So if you're somebody who's already involved in penny stocks and you already have learned about it, a lot of this information might be pretty basic, but I am going to go pretty in-depth with this and kind of cover all of the grounds with penny stocks. So you might get something out of this video, but if you're already experienced with penny stocks, this might not be the best video for you. But if you're a complete beginner and you're looking to learn about penny stocks, this would be the video for you. So personally, I don't invest in penny stocks, and I'm going to explain to you in this video why it is that I don't recommend that beginners invest in penny stocks. But for people who are looking to learn more about it and kind of decide if it's an investment you want to get involved with, maybe this will shed some light on that for you. So first of all, what is a penny stock? There's a couple basic characteristics of penny stocks. The first one is that they trade outside of the major stock exchanges. So for the most part, you don't see penny stocks on like the New York Stock Exchange or on the NASDAQ Stock Exchange, the major exchanges there. They have a small market cap, and they generally have a low stock price. So I'm going to talk about this in a second here, but basically most people have the misconception that a penny stock is a stock that trades for under $1 a share. But in fact, the SEC defines a penny stock as any stock that trades under $5 a share. Now, you do sometimes see penny stocks trading on the major exchanges under $5 a share, but for the most part, you'll see most of the cheaper penny stocks on smaller exchanges, which I will tell you about in a second here. So what are other names for penny stocks? Sometimes they're called OTC, which stands for over-the-counter. That has to do with the trading of the stocks. They trade through the OTCBB, which is the OTC Bulletin Board. So if you ever see that next to a stock symbol, understand that that is a stock that trades on the over-the-counter stock bulletin board. And they're also called pink sheets because basically pink sheets are daily publications compiled by the National Quotation Bureau with a bid and ask price of over-the-counter stocks, and they are actually printed out on a pink piece of paper, hence the nickname pink sheets. And like I said, so the SEC defines a penny stock as any stock that trades under $5 a share. Most penny stocks, like I said, don't trade on a major exchange, but some do because large companies end up trading in that SEC-defined penny stock range of under $5 based on market cap. So if a stock is performing really badly, it's possible for that stock to be trading on a major exchange, but to be trading under $5 a share. So who actually invests in penny stocks? Who are penny stocks for? Stock market investors who have a high tolerance for risk are generally the people who are investing in penny stocks because these are a very risky investment. Penny stocks have high volatility. High volatility, it means higher risk, and anytime that there's higher risk, there's higher potential reward. But when there's also a high potential for reward, there's also a very high potential for loss. Penny stock traders generally set a stop loss order on their investments, so that's basically something you can set up where you have it automatically sell that position if it falls a certain percentage or a certain dollar amount. So I don't really know anybody who trades penny stocks and just leaves them there to let them free fall. Generally, you're very careful with them because the price is so volatile, they could fall very quickly. So you have stop loss orders in place to try to kind of mitigate some of that risk associated with them. Penny stocks are appealing due to their explosive moves. So I'm sure you guys have heard of penny stocks, going, doubling or tripling in a trading day. So that's why people like the idea of penny stocks. Is you invest in a penny stock, you don't pay a lot of money for the investment because they're trading at a lower price per share. And then there's the potential, supposedly, for that stock to quadruple in value. And the thing is, guys, that is so uncommon, and what's more common is that you'll invest in a penny stock and it'll fall in value, and even sometimes too you'll see these companies end up going bankrupt and you lose your entire investment. Penny stock gains are unrealistic generally with listed stocks because they're not as volatile. There's generally less risk associated with listed stocks too because they're more reputable and stable companies, and there's certain standards you have to be held to in order to be on a major exchange, which we'll talk about in a little bit here. But I pretty much have this diagram here just to explain basically some of the characteristics of penny stocks. So a penny stock company, what would you expect out of a penny stock company? Well, they're going to be a growing company. They have limited cash and generally limited resources as well. and they're often not profitable companies. So here's a couple of things. Depending on which exchange it's on, whether it's traded on pink sheets or the OTCB, the OTC over-the-counter bulletin board, they may or may not have to even file with the SEC. So as a result, it's incredibly hard to get credible information on penny stock companies. I'll explain in a second, because one of those two, they do have to have some filings with the SEC, but the other one, they don't have to file with the SEC whatsoever. Now, with a listed company on a major exchange, they have to file with the SEC, so you know you can get credible information on that company. They're not going to be on a major exchange. They're going to be on the over-the-counter bulletin board or the pink sheets. So as an investment, if you were to invest in penny stocks, what would you expect out of a penny stock investment? First of all, they're highly speculative, meaning the investments are largely based on speculation of future value. They're very high risk. Like I said before, you can invest in a penny stock and lose your entire investment because the company goes bankrupt. And there's very high volatility with these stocks. And that is due to the fact that there's very low trading volume and there's poor liquidity with this stock. The other problem with this too, and I know I'm going to mention it somewhere in here with all my notes I have, but just to throw this out here too, a lot of people don't realize this, but what's good about trading a stock on a major exchange is there's so many people buying and selling that stock. There's high liquidity, and as a result, it's pretty easy to sell or buy that stock because there's so many people actively trading that stock. Now, with a penny stock, there's no guarantee that there's a buyer on the other end when you're looking to sell that stock. So you could potentially be in a position where you invest in a penny stock, it goes way up in value, you go, great, let me sell it. And you can't sell it because there's not a buyer on the other end because there's poor liquidity with that stock. So that's something you have to consider as well before you decide to invest in a penny stock. So if for whatever reason you absolutely insist on trading a penny stock, my recommendation to you is to at least trade a listed stock, because these stocks are required to file with the SEC and they're regulated with the SEC. If you're trading pink sheet stocks, there's no regulation with the SEC required. And with the OTC bulletin board stocks, there's minimal filings with the SEC that are required. So why is it that penny stocks are a risky investment? There's four main reasons here. The first is the lack of public information. So as we just said here, the OTC bulletin board stocks are required to file minimal information with the SEC, while the pink sheet stocks are not required to file with the SEC. As a result, it is difficult, or in some cases impossible, to find credible information on these companies. So if you're somebody who is investing long-term in a stock, or you're looking to learn about, the company fundamentals, it can be very difficult to find good information on the stock. And you can't even, in some cases, guarantee the information you do find is legitimate and credible information. When you're trading a listed stock, because they are required to file with the SEC and they're heavily regulated by the SEC, the information is much more credible when you're looking at the fundamentals of the company. Number two is that there are no basic standards. Basically, listed stocks, they have to fulfill certain standards in order to stay listed on the stock exchange, otherwise on the major exchanges. Otherwise, they end up getting delisted, and a listed stock will then be trading on either an over-the-counter bulletin board or through pink sheets. So they have to fulfill certain standards in order to stay listed. Now, on the other hand, there are no standards to remain on the OTC bulletin board or on pink sheets. So there's no basic standards for companies to be on there. So there's nothing guaranteeing that this is a good company to invest in. Whereas with the major exchanges, there are standards they have to follow. Number three is history. So because penny stock companies are often newly formed companies, there's no history to base that investment off of. And in some cases, if there is a history, it is one with a poor track record, or if there's no history on them, there's no track record for that company. And the other thing too, like we talked about, the risk of companies going bankrupt is much higher when you're investing in penny stocks, because many of these companies are approaching bankruptcy. And when a company goes bankrupt, pretty much everybody gets paid before the investors get paid. So you'll be lucky if you ever see any of your money that you had invested in that stock. And number four is liquidity. So liquidity is basically the degree to which an asset or security can be quickly bought or sold in the market without affecting the asset's price. This is where there's a lot of danger associated with penny stocks, okay? First of all, like we said before, it may be very hard to find a buyer when you're looking to sell your penny stock. But second of all, there's a lot of traders out there who are manipulating the stock price because of the poor liquidity, meaning that changes and if more people are buying or selling, there's more of an effect on the actual stock price than a stock with more liquidity. So basically you have people that do what's called a pump and dump scheme. I talked about this in one of my other videos. I don't remember which one it is, but there's a lot of scams associated with penny stocks. I'm just going to mention this one because it's the most common one. But if you guys are curious, look up just penny stock scams, and there's a lot of them that are explained there. And if you guys want me to do a video just on the scams and penny stocks, let me know and I can try to get that out to you guys. But basically the pump and dump scheme is where somebody will buy a large amount of some random penny stock, okay? And generally this is people who have an influence or they have a audience to speak to. So let's say somebody had a stock market newsletter they sent around to people's emails and they had active readers. So they would buy a large amount of that penny stock, okay? And then they would send around a newsletter saying, this is the next hot penny stock. You need to buy as much of this as you can get your hands on. So then when everybody listens to them and buys this penny stock, the price of the stock soars, and then the person who wrote that newsletter sells for a profit and then just walks away, and soon after the stock price topples because there's nothing justifying that stock price because nothing that they said about that being the next hot penny stock was actually true. So that's what's called the pump and dump scheme. And as far as people I know who invest in penny stocks, I have a couple of friends of mine who have invested in them. And a couple of them have had luck. So like they've invested in penny stocks and they've seen it quadruple in value and they've made a lot of money. But the problem is, guys, how is that repeatable? Because generally when you're investing in penny stocks, you might as well just close your eyes and just point and just pick whatever one your finger lands on, because there's no real way to follow the charts because the charts are so volatile. It's hard to find credible information. So how can you repeat that in the future? That's what I want to see with an investment is, okay, I've made money. I want to consistently make money going forward. I don't want it to be random where it's like, hey, I was able to be lucky and pick a good stock. I hope it happens again. And so basically the people I know who have invested in penny stocks, most of them have lost money. Of the few I know that have made money, they end up just continuing to buy penny stocks going forward, and they can't repeat that crazy quadruple of price that they did before on that first penny stock because it's largely just based on speculation and luck. And I'm not the type of person who wants to invest based on luck. If I was, I would just go to the casino. And, I don't know. A lot of people look at penny stocks as an investment, and especially when I'm talking, these are mostly the ones that are on the like the OTC bulletin board and the pink sheets. I don't see those as an investment. I see those as a gamble, to be honest with you guys. The only people that I know that are making consistent money on penny stocks are actually people who short sell pump and dump schemes. The biggest person I know who does this is Tim Sykes. I'm not sure if you guys have heard of him before. He does a lot of promotion, and a lot of his promotion tactics are kind of, he's kind of known as like the typical douchebag stock market investor because he puts up pictures of himself driving cars and holding big stacks of money to promote himself. And I guess his strategies are kind of unconditional, or the way he comes across. And I've never watched any of his videos for the most part. I've read a couple articles about him. But basically what they do, and the people he teaches, what they do is they basically watch for what appears to be a pump and dump scheme, and then they short sell that stock and they make money from the falling stock price. So that's not a conventional trading method, and it's not a simple trading method either. That's quite complex. I've never short sold a stock, but it's a little more involved than just buying a stock low and selling it high. From everything I've found, I have not seen people who've consistently made a profit with the strategy of buying low and selling high with penny stocks. Alright, so how does a penny stock actually show up on the market? So this is basically how a penny stock is born. First of all, the company files registration statement with the Securities and Exchange Commission, or they file an exemption from registration, and then they end up, they begin taking orders from the investors. And then at this point, the company can apply to be listed on a major exchange or continue to trade over the counter. This is a process known as an IPO, or an initial public offering of stock. The IPO is a means for the company to raise money. They're basically selling off a portion of their company in return for capital to expand or grow their business. It is difficult for small companies to get or stay listed on a major exchange due to hefty costs, strict regulation, and requirements. So that's why you'll often see stocks that are listed and end up falling off and end up trading on a penny stock exchange. For that reason there, it's difficult for them to stay listed. And it's also common for companies to offer additional secondary market offering after the initial public offering. And the problem with that is it actually will dilute the shares of the stock. The other thing to remember with penny stocks too is there is after hours trading. So many penny stocks can be traded after hours, and many of the market moves happen after hours, making it extremely risky to leave a stock unattended. As you guys know, with listed stocks, there's market hours, and you can trade stocks during market hours, but off hours you can't trade stocks. You can set orders to sell immediately at the open or buy immediately at the open of the markets, but you can't actually exchange shares after market hours. But with some penny stocks, you do have that option to trade shares off market hours. The other thing too, due to that poor liquidity, even if a penny stock spikes after hours, it can be difficult to sell it. So you could have a stock go way up. Maybe it's trading after hours, the stock price goes up, you try to sell it, and there's no buyer on the other end looking to buy that stock. And the other thing too to remember with this is the quotation systems around penny stocks. They're not as good. Penny stocks are known to have poor reporting, making accurate quotation difficult to find. So guys, that's pretty much the basics of penny stocks here. So if you're like a beginner investor, and I know I understand the allure with penny stocks, because you're thinking like, okay, well, let's say you're trying to invest $1,000 and you see a stock that's trading for $1 a share, that's technically a penny stock, versus a stock that's trading at $100 a share. And you say, well, I can only buy 10 shares of that listed stock, or I can buy 1,000 shares of this other stock, and it seems like you're getting more bang for your buck. But stock price has nothing to do with how good a company is or how good an investment is. And a lot of very shady people are out there trying to push penny stocks on people. I know when I was doing research for this video, just looking at who had made videos on penny stocks, a lot of people are out there making videos, making penny stocks looking really like a good investment for beginners. And it's just unfortunate because they're not an investment for a beginner. Penny stocks are for experienced investors who have a very high tolerance for risk. So as a beginner getting into stocks, it is the last place I'd recommend you invest your money. If you're looking to get started in the stock market, maybe look at a dividend stock, or just simply invest in a company that you really like. That would be like, I guess, kind of where I'd recommend getting started is, pick your favorite company. Maybe you really like Apple or any certain company, and you want to do a long-term investment and learn about, checking stock prices and learn about dividends and, learn about quarterly earnings, reading earnings statements and stuff like that. That's the best place to get your feet wet. Penny stocks are not where you should be getting started with investing. But anyways, guys, that's pretty much all I got for this video. If you guys have any questions about this topic or any of the other topics I cover on the channel, please feel free to drop me a comment below. And if you guys are looking to learn more about investing in stocks, not penny stocks obviously, but I do have my guide on investing in the stock market, which I will link up in the description, and there should be an annotation popping up here on the screen as well. But if you guys enjoyed this video, please drop me a like and then consider subscribing to be notified of future uploads. And I thank you guys for watching this video.